Day traders. This is Dean, and I will be bringing you guys today's session. So what we have today is the reversal patterns that we're going to be discussing. Now, in the last session we spoke about candlestick formations and how the candlesticks itself will assist us in finding opportunities to enter the market. Also bearing in mind that we don't just enter purely based on a candlestick formation, but rather we enter we enter the market based on where the candlestick is forming. So, for example, if we see a hammer that is forming on support, then it is a valid opportunity for us to take a buy. And if we see a shooting star forming on a level of resistance, it's a valid opportunity to take a sell. However, we must also bear in mind that specific candlestick setup must be in line with the overall market structure. So basically, we're not just entering on candlesticks alone, we're entering on the overall market setup, and the candlestick is the opportunity, or it can be seen as the signal to get in on the position. With that being said, in today's session, we're now going to look at not only candlestick formation and candlestick reversals, but we're actually going to look at market setups in terms of reversal patterns. And there's one specific pattern that we're going to be talking about this morning, and this pattern is very, very consistent. It works, and it appears multiple times. Now, what we're going to do is I have the setup over here. And basically, I'm looking at the daily chart because I've looked at the other time frames, and I found that the setup that we're looking for, or the topic that we're going to be discussing today, is very prominent in this specific time frame. So basically, what we have over here is a bull market. Now, if I zoom out over here, you can see that the market is very, very bullish. So I'm going to zoom back in, so you can basically see that overall, this market has been building momentum to the upside. So if we're looking at this candle over here, we're looking at this specific setup, we're basically anticipating that the market will now retrace, like we discussed in the first session, or in the first episode, where we realized that for every trend there is a retracement, and therefore we will be looking for an extension, and that is the market structure that we follow. However, we will then highlight our level of support. Now, I'm just going to make this line a solid line over here, and this line is going to represent our support level, okay? And then we're going to highlight our resistance level, which is all the way up over here. So technically now what we have is a trend. Now notice that I'm not taking it all the way from the bottom over here. In fact, what I am doing is I'm looking at what is more current in relation to this current trend. Remember, the market is made up of several trends, which results in its own retracement, which results in extension. And that extension is seen as the new trend, and the process repeats itself over and over again. So essentially what we're going to do is we're literally just going to highlight this over here as a predominant trend in this market. Okay, so now that we have our trend set up and identified, we now know that we're looking for the market to retrace. So what we're going to do is, the way we find our retracement is, like we said, we're going to draw in our firm to see where the market could possibly want to find its retracement. Okay, so like we said in the last session, we want to see the market test a level that it is familiar with. So I'm going to put a level on the 38.2, and then I'm also going to put a level on the 50 fib. The reason I'm looking at the market to perhaps test the 50 fib is because it's very close to this high over here. So I'm not necessarily favoring the 38.2 fib. However, I'm also not disregarding the potential of the market to test that level either. So what we're going to do is we're going to go ahead and press play, and we're going to see which of these two fibs the market is going to use as a level of C, where it's going to build momentum to extend beyond the point of B and give us a new high. So let's just have a look and see what happens. Okay, perfect. So I hope you guys see what I see. basically what we have over here is a market that has ran to the upside and now is busy retracing. But like we said, the market is more familiar with the 50 fib as opposed to the 38.2 fib. And as you can see, the market has made use of this zone over here, where the market has tested previously as resistance, broke through it, and has come to retest it as support. And now we see that the market has not only formed a reversal candlestick, which is a hammer, but the market has also formed that hammer on a support level with a valid retracement. So if I draw that over here, if we just draw this retracement level over here, so from here till that point over here, we see that the market has now retraced. So naturally, we're now going to prepare ourselves to see the market extend beyond this point of B. So if we now just allow the market to play forward, we will be looking for momentum to build to the upside, and we will then leverage that information that we found over here to take us all the way to the new high. So let's see what the market does as it relates to the setup. Okay, now I want you guys to notice something. Something took place over here, and I want to highlight this by zooming in, and I just want you guys to see what took place. If you look carefully, what you'll see is that the market has tested this level over here, which is 34.42, let's say 34.40, 43.40. The market has found the resistance over here, retraced to the 50 fib, and then has supposedly run to this level, but instead of breaking it, the market formed a shooting star, which is also a reversal pattern. But beyond forming a shooting star, the market has formed its first reversal pattern, which is regarded as a double top. And basically what we have when we're looking at a double top, we're looking at the market testing this resistance once, retracing, and it is at this point of retracement that you have more buys being collected and more value being pumped into this specific currency pair, and thus forcing value to increase beyond this point over here. But instead, what we get is the market coming to collect more buyers over here. But even as the market collects more buyers, alongside the buyers that was collected over here, we still see that value, although increased, it was not able to increase beyond this point of high over here, resulting in the fact that value is now starting to decrease because the amount of buyers that was collected over here and that was collected over here was not enough to overpower the amount of sellers that was found on this level over here. And as a result of that, we see that the market, instead of the market extending, the market comes to revisit this level of resistance as well. So now what we have is called double tops. Now double tops is a very significant reversal pattern because it tells us that buyers are not, in this case, buyers are not able to push beyond this point of resistance, and as a result, sellers are the ones that is going to build momentum now to the downside. Also, double tops is an indication of buyers' weakness because the market was building momentum from a new point of support, but once it hit that level of resistance that was previously resistance, buyers were not able to push beyond that level, and now we will see that value begins to drop drastically as we start to take out lows and no longer make highs. So you can actually see how the market is building momentum to the downside, and that was simply purely based on the fact that the market was not able to break this resistance level over here. So in today's session, what I want you guys to always pay attention to is the patterns that the candlesticks will form. If you look very carefully, and we go back, you will see that there was a time where the market didn't make double tops. Instead, the market came here and made what we're looking at as double bottoms. We can actually see that when the market came from a point of high, it corrected itself and then it came to this point of low. Upon coming to this point of low, the market retraced, and that retracement essentially was the market setting itself up to extend beyond this low over here. However, as the market has tested this low before, the market retraced and then came to retest this level again. And as it retested this level, it formed what we now view as double bottoms. And that double bottoms was the catalyst for the market to build the momentum all the way up till the first test of the resistance when it formed the double tops. So what I want you guys to notice over here is that double bottoms has to form on support, and it is an indication of a bullish reversal, and double tops has to form on the level of resistance because it is a bearish reversal pattern. So when I look at this over here, I can see that the reason that the market has built momentum all the way to the upside is because the market has found support twice and then built the momentum. Now we can see that the market is building momentum to the downside, and the reason for that is because it tested resistance twice, and now sellers are now starting to push value further down. This is basically this is what we're looking at when we see the market setting itself up and making use of not only candlestick formations but also making use of reversal patterns as well. So it is very important to keep your eyes out for when the market is testing resistance twice, and that can be seen as a double top, which is obviously a bearish reversal pattern, or the market can test support twice, which is going to be seen as a bullish reversal pattern. And if we can pay mind not only to the reversal candlesticks, but also pay mind to the reversal patterns, then we increase our probability of taking a successful trade as we move forward. So this is the topic of today. I hope that it has bring a little bit of context in terms of how or the types of things that we're looking for before we're entering a position. And if you guys are in a position and the market is forming double tops or double bottoms, make sure that you're not basing everything on that one point of confirmation, but rather make sure that you're looking at the overall market structure and ask yourself, is this what the market is actually doing? Does it fall in line with what everything else is saying? So moving forward, we are going to be looking at other topics as well. In the coming future, we are going to be looking at how we will be using moving averages, which is used also as dynamic support and resistance, how we will be using the MACD, the divergences of MACDs, how we're going to be focusing on trade setups as well as how to place a stop loss and where to place our take profits. And then we'll be also focusing on trade management. So in the first season of, this is basically the last episode of our first season. And the focus of this episode is to help everyone understand the importance of market structure. What you want to understand before you can manage a trade, you must first understand the market structure. And so we've dedicated the first season, or the first couple episodes of this season, to solely empower every analyst to understand basic market structure. From here, we're going to build momentum into kind of advancing into understanding market structure and using that information to then be able to manage a trade. So these are all on the front line of our course. I am very excited to share with you guys as we move forward the new information that we're going to be getting, the new type of market setups that we're going to be looking at, the way that we will be able to identify and solidify trades of quality as opposed to trades of quantity, and how to take advantage of those long and large profitable swing trades. We will also be doing another podcast where we'll be focusing on more day trade, which is short-term trading. But for now, we are focused on just getting you guys set up and understanding basic market structure. So from my side, again, this is the last episode of our season 1. I do hope you guys have enjoyed it, and I hope to see you next time. Cheers.